We have quite an interesting session so far, and now we have a chance to talk to regulators and those who are suffering under regulators. Let's call them banks.
Suffering.
So, okay, let's see. Let's discuss. So, let's start maybe from the banking point of view for three of you. How would you see the role of the regulator, and if what would you expect from them if they would listen to you? And if you could tell them what to do, what would you expect from the regulator in order to help you develop the business, but also, of course, to stick to the regulations and to keep the safety of the customers?
Yes, so we are, thanks. Hi again. So we are in a very unique position, at least at Revolut, where we kind of have to deal with 50 plus, not only like ECB on one side, because we are directly supervised by ECB since this year, technically, although we've been in touch before that as well. Then all the local regulators also have something to say on top of ECB, some local nuances. You don't know the market, we know the market better, etc., etc. And then many other industries, the markets where we also operate, UK, US, LATAM, we're entering Asia, India, and so on. So 50 plus regulators essentially contact our regulatory affairs and regulatory compliance departments are the biggest. I mean, a part of customer support, etc. Right? We even have the programs called Horizon Scanning program, where we actually employ AI as well. Following on the AI topic, where it helps us to really see what is coming, not only on the ECB, EBA level, but also the local, nuances, etc., etc. Coming back to the question, and you can cut my mic after that. It's too many people here, so we will last forever. The paradox is this: we want the same. We want the customers in the particular market, the particular country, as well as regulator in that market, to be safe, to be protected, B2C retail customers, business customers. We kind of want the same. We want to provide the best services to them, etc., etc. However, the paradox is this: another objective of the regulators is to kind of protect the customer in that market, for all the kind of the bad things in there. And whatever they do in order to protect the customer will be seen by the customer as a good thing. Yeah, that's good. For example, solidarity tax that we have in Lithuania, right? The increase just 5% on top of the profit, bank profits, because the bank profits are growing through the roof. Let's take 5% more for them. Let's call it solidarity tax. Let's put it in the defense, right? Everyone likes it. Of course, everyone will like it. You ask the banks to strengthen some of the cybersecurity stuff, some of the compliance stuff. The customers will like it. Of course, that's amazing. Crush them. Banks are evil. Take the money from them. You get the point, right? So this paradox is always kind of shifted. From the regulators' perspective. In many cases, it will be like whatever they will do, as long as the audience, the regular Joe on the street, is kind of happy, everyone will be happy. But for the banks, then it's additional kind of, and then we will go into kind of ideas and kind of things, what they could do. Harmonization is definitely the word which we will probably use. At least I will use a lot, because you wouldn't believe how much of the difference we get from the regulators when they ask something, to implement, or we need to follow the guidelines. We have Singapore on one side of the world, really like being almost like a co-founder level, really kind of working with us and kind of asking various things. We have some of the countries in Europe really like very kind of nuanced. No, what do you talk about passporting the license from? No. Wow, but it would be good to have your own license in our country, right? We want to protect our users in our country. We don't care about this EU licensing thing, passporting thing. We never heard of it. Then you have America with their own kind of ideas, right? And then you have a lot of countries in between with the kind of nuances kind of things, So it's a lot. I don't have a list, but it's harmonization would be one of those, Even if we are within EU, I'm sorry, I'm now last sentence, promise. Even within the EU, we say, oh, it's got, like free movement of that and that. Let's make some sort of free movement of regulation, if you like, right? Some sort of harmonized free movement of regulation. That would be kind of a good starting point.
So harmonization would be the first topic. Joao, what is your? You have
yes. I think that there is part of the problem is not due necessarily to the regulators. It has to do more with legislation and all the process that we have at the European level and that we had since the last financial crisis, where we had much strengthening of legislation, and we have constant changes to the legislation. We have lots of legislation that is defined at level 2 with mandates that are provided at level 1. We have also many years where there is soft legislation that in practice has very strong power. If we look at the ESG, for example, as I mentioned before, we had the ECB guide on the management of climate and environmental risks that was published in November 2020, and it was guidelines that were not legally binding, but afterwards it was decided that banks will have to comply that with until a certain deadline, and the ECB start threatening with pecuniary sanctions. It was the first time they did that if banks did not comply with what was established. And I think there is also the issue, and if you look at the Portuguese banking system, we have banks that are, in comparison to other big European banks, that are smaller. Even the bigger banks are smaller than the other banks. So when we have all these new requirements that are coming in several dimensions, we can see that it is more and more difficult for smaller entities to properly comply with all the expectations that are associated also with the legal requirements. In the case of Portugal, we have a very good dialogue with the national supervisor, but there are some areas, for instance, when you talk about the ESG data, where we'll still think that they could do a bit more. We're trying to have them producing some information that can be useful for banks, for the financial system, and also for the economy as a whole.
Okay.
Just from thinking about what they said, I'm going to use another word than harmonization, but it's pretty much the same thing. So what I would expect the regulator should be considering in the future is sustainability. So, if you think about AI as an example, which is going to be a lot of the topic today as well. So there is now an EU AI Act. And how does that tie into the banking regulation? Then there was discussion again about ESG. So, and then one thing that we are paying a lot of attention to right now is the explainability to the regulator. So, for example, when you do credit risk modeling, of course you would want to do as much with LLMs as possible. You would want constantly retrained models, or you can't, because the regulator says it needs to be fully transparent, it needs to be fully explainable. And so there, if we try and combine these things, I would say the regulator should consider what is a sustainable future for regulating banks. Combining all these things, should there be a separate AI regulation, or should that all be part of the banking regulation, banking reporting, and so on? Because then that would also bring it to the explainability factor. So harmonization, definitely. Sustainability in terms of, again, defending what you all said. We are also a small bank. So if we get 123 different regulations coming to us, it prevents the competition, which is the whole idea of the banking and EU banking license in the end, that there would be a level playing field for the small banks to challenge the big ones.
Yeah. Next time we should probably bring the equal number of banks and regulators, because otherwise Michal is completely under fire. But please.
Well, I hope well, it will be up to you to judge what I say here, but I hope we'll find some space for agreement. So I'll start with saying that Czech National Bank is integrated supervisor, so we supervise the whole financial market. So when we heard about regulatory tsunami, trust me, we're on the receiving side of that too, because I just checked, I remembered, although my background is in payments, MiFID, the MiFID package, the investment services, depends on who you ask, but there's between 6,000 to 50,000 pages of rules. So, just imagine being paid to know all of that by heart, or, be ready to answer the questions. And also important for our perspective, I think, is we're also a bank. We provide payment services for our employees and for the state. So we're on the receiving end of all the rules as well. So this also, sort of tempers or modulates or incentivizes us to provide practical answers to the questions that we receive from those who are regulated. And we don't have a legislator here, so I would agree with you that the issue actually does come from legislation, because now what we see in the EU is the move from directives to regulations. Regulations are directly applicable. So on one side, that's good because they should be, you already have a harmonized rules. On the flip side, the way regulations are done, especially in rather technical areas like payments or other parts of financial market, you really need them to be precise and clear, and that doesn't happen always. So then we end up with rules that we now have to explain to ourselves and to the banks. And with the directive, you at least have a chance on the national level to fix it somehow. But with the regulation, you can't really, and the European legislative process is so long to fix things. Quite often you find out when the regulation is published that some number is wrong or something doesn't fit, so they try to fix it, but it always takes at least 6 months. But after saying all this, I have to say I'm an EU optimist, right? Before EU, we were used to have wars with each other, so it's definitely better to argue about regulation than fight across borders. So this is all fixable. Just we have to have a focus on it. And I also have an understanding for colleagues in the European Commission. Their only power that they have is to issue new legislation. Now they have a bit of a budget, so now they can also start supporting financially some projects like the EU digital ID wallets. So they're doing that as well. But before they only had legislation, and you know the saying, if you only have a hammer, everything looks like a nail. So they just keep hammering at it. And actually the main legislator in Czech Republic who negotiates the legislation is Ministry of Finance. We have only a supporting voice, but we often repeat what we heard here from the Banking Association, that too many changes too quickly. Let's leave the rules play out a couple of years and then try to fix what doesn't work. Let's not change them constantly. And unfortunately, after Brexit, Czech Republic was usually on the liberal side of the discussions in the council. And after Brexit, there's just not so many economic liberals in the discussions often. So our voice became much smaller. So now we really have to pick our fights and just basically focus on what would be very detrimental to our market, and then try to at least influence that. But then, maybe I'll keep what we can. Maybe what we are then, how we're trying to help or solve these issues for everybody. Although we are a smaller institution, for many years or decades by now, we had a sort of ask us anything mechanism. If you're a regulated subject and you write us a question on legislation, we insist, we are not a free legal service. So we want you to send us an analysis and how you think the rule should apply to the situation. In ideal case, we would reply, yes, exactly. We see it that way. Quite often we see it, or sometimes we see it differently. So we used to do this bilaterally, but then last year we changed the approach, and usually our internal deadline was 30 days to an answer, but we try to answer more quickly. If it was simple, within a week, 2 weeks. The more difficult cases took longer than a month, but a couple months. And about a year ago, we changed the approach, and now the answers take a little longer, but we publish them to be fully transparent for everybody. And we also consult them before they get published with the Banking Association or the FinTech or the Insurance Association. So we're trying to provide clarity. And of course, given the way legal system works, once it's published, it's also binding for us. It's not a law, but if we then go to court with the bank or insurance company and there's something on our website saying that what they did we thought was okay, then of course we're gonna have a very hard time in the court, arguing otherwise. So at least what we're trying to do is to provide clarity where we can, and on the European level, we quite often argue, let's have less rules, let's make them less complicated, we believe market can actually fix a lot of these things. And I think what was crucial, it's crucial what was said here. On one hand, we argue or we dislike the oligopolistic nature of banking in many countries. On the other hand, we make it almost impossible for the smaller, for startups to appear like Revolut and gain size, or we just make it difficult for smaller banks to exist, which I think, and then on the EU level, we have this policy of making, trying to encourage mergers to have a couple global banks that could compete with the US banks, which is fine. I don't dispute that, but we should really maybe put the priorities, next to each other and decide which one is our priority.
Not to promote, they are not sponsoring us, but let's say Czech supervisor is one of those rational voices. We really like dealing with the Czech supervisors because they are like rules-based, rational, and that's what we want. I think any player in the market would want rules-based regulation or legislation, right? Not like emotional one, not like political one. I know, like, regulators have to be neutral, etc. But in many cases, they are appointed by the president. President, in many cases, is part of the party. So it's kind of some related. There is always some sort of incentives in the background, etc., etc. So this kind of emotional, let's brand it emotional regulation or emotional kind of legislation is what we kind of don't want, and many other players, especially new players, don't want. So what is going to happen there? Will they treat that? And I'm talking about harmonization. I'll give you now very specific, because you were hitting me on like, oh, give me some more specifics. So, for example, European deposit scheme. Where is that? Where is that stuck for last 2,000 years? Everyone is now want their like fintech. They have the sandboxes in Europe, etc. All the markets like you want to be like Lithuania, etc. And now Lithuania has Revolut, right, with quite a lot of deposits, and it's growing massively, right? And obviously the regulator is like, oh my God, what will happen? And then it's like, oh my God, what will happen? And then the regular Joe on the street, oh my God, what will happen? It's good that we are not at this SVP, level, and we haven't lent anything essentially, so we could just give the money back if they want, the people. But you get the point, right? So bring us that at least, harmonize on that, get the sense on that. Another one, very, very kind of hot, I'm only talking about the hottest ones and trendy ones, like a TikTok user, is IBAN discrimination. Where is that aligned, right? I'm not talking again. Some countries are fixing that, some, banks are fixing that. When you have, like, for example, in our case, still many countries, many markets have LT IBAN, since we are kind of issuing, passporting the Lithuanian license. Now we are establishing branches all across Europe, so they have their local IBANs. Portugal will be the next one in a few months. I'm said, or maybe weeks even, to have PT IBAN, right? So there is no discrimination. So somebody wanting to get the salary paid into the Portuguese account and entering now LT, they may get an error on the sender bank saying, oh, but you're not like, give us your Lithuanian address. It's LT IBAN. Yes, but it's like, I'm in Europe, like EU, you get the point, right? So there's many kind of these cases where it's like, it is big cases and big kind of harmonization needed, whereas we're still kind of, and let alone CBDCs, I really like CBDCs is another interesting topic, but that's for next year.
Yeah. By the way, since we have cut off quite a lot of Q&A sessions in favor of the panel, you guys please stand up and whatever questions you might have. I mean, I have plenty of, obviously, but I mean, it's supposed to be the interactive discussion.
Leaving my mic.
Okay. Yes, please. Yes, please.
Our Portuguese attendees doesn't know, it's investment and private wealth management bank, and that is related to my question, which is mostly directed to João. In concerning ESG, in my point of view, I think the European regulator is using the banking industry as a shield against ESG problems. So, what concerns to the banking investing industry, for example, regarding to QIC forms, let's be honest, the main goal of the banking industry is seek profit, right? And with these ESG regulations, in what concerns to QIC forms, the bank has to evaluate the potential clients and the potential investors in what ESG metrics concerns. And there is a tendency of the European regulator to oblige the bank to choose and to work with more greener clients or greener investors. And it is a fact that, for instance, in Portugal, there is not a solid insurance on green bonds. And the green funds, for example, have a lower risk, or at least an equal risk, comparing to other funds, and this leads to lower appetite from investors, right? So this could lead to a problem if the banks are demanded to choose and to work with greener clients and greener investors, and on the other side, the investors seek higher risk, which leads eventually higher profit, higher than the green funds or the green products. How do you see the banks, particularly in Portugal for Brown and for the others at a global scale? How do we see banks can solve this, or at least do you think that the state and the European regulator should be looking for this point in particular, and how we can solve this? Not refusing clients, collecting and creating new products to clients who wants to be green and wants to act according to Paris Agreement and help us to grow and to create a banking ecosystem more green and more compliant with ESG values and metrics. And by the other side, at the same time, not losing those clients and those investors who are not as green as the European regulator expects.
I can assure you it's not my sister, although a lot was said, but she's not my sister.
Yeah, she has more hair than you. Anyway.
Thank you very much for the question. It is a very good question. I'll try to be brief. I could talk hours on the subject, but I think there are several issues. I'll try to approach some. The first issue is that some years ago, it was decided that the financial sector would be the enforcer of climate policy. That is to say, at EU level, there was this decision. And what we have now, we have the issue that we have a very strict regulation that applies to Bank, but we don't have such strict regulation that applies at EU level or national level. I'll give you some brief examples. For example, the European Investment Bank Group has climate policies, but they are not aligned with the taxonomy. That is to say, you may have a credit line that is green for the IB group, but if Bank says that promoting the green credit line and it's not taxonomy aligned, it has to be careful because it can be something like greenwashing. Imagine if we have national governments, some years ago, the European Commission published a notice where it basically says we have the taxonomy. I'll not be very detailed, but we have technical criteria that is defined there. We have significant contribution. We have do no significant harm. We have minimum social safeguards, where basically with the recovery and resilience facility, the European Commission said to member states, okay, we will have a lighter do no significant harm for you to apply because it's not possible to apply this that is defined in the regulation. That is to say, we have a default level of requirements for banks and other financial agents that we have for other players. As for what you mentioned regarding funds and new issuances, it is true. Some years ago, there was this issue of the reclassification of Article 9, Article 8 funds because they are not complying to what was expected to be compliant. We have the issue of data because banks need data on ESG. If they don't have the data, it is not possible to classify. We have a large amount of entities that is not obliged to report data that is out of scope of non-financial reporting. And what is expected is that the banks collect information on a bilateral basis. As we are mentioning also regarding KYC and information about investor preferences in ESG, we had with MiFID II changes, also with FDR, we had banks have to request information from clients. What are their ESG preferences? They have to adapt the product offering to their preferences. They have to be very careful to prevent greenwashing, but at the same time, they also have to finance the transition. That is to say, now we have something that is defined is sustainable or is not sustainable, and there's nothing in between. And what we have is that bank financing and bank investing reflects the economy. So if the economy if a large part of the economy is not covered by the classification of economic activities that are sustainable, banks cannot stop financing immediately those activities. Even we had, if you look at some exclusion policies that we had before, for instance, before the war on Ukraine, we had exclusion for fossil fuels. We had the exclusion for weapons, for the manufacturing of weapons. And afterwards, with the crisis that we had on the gas, we had many countries in Europe that went back to producing energy from coal. And now we have a new industrial policy that wants to speak with banks to see how can we promote more lending to the manufacturing, to the defense sector. That is to say, all this issue of the ESG and what is sustainable or not changes a lot, also due to the political circumstance that we have. We have the long-term goal of climate neutrality, but it changed a lot. And just picking up on what was said before by the previous speaker that I like a lot from the Czech National Bank, I think. When you're mentioning the issue of legislation, what we have now, if you look at the legislation that is published, you'll see that you have this regulation that is directly applicable, or we have this directive. But you have something that it says, okay, it shall be reviewed in 2 years' time. It shall be changed in 2 years' time. What happens is then you have a new European Parliament, and they have a mandate to change the legislation if needed. But they have this political pressure to show that they changed something. So banks are constantly updating the legislation that is being changed. That is to say, there are many times where they're still looking to apply what they have, and it is already being changed or planned to be changed for the future. So entities such as Bison Bank that have, let's say, a smaller dimension compared to others, have to do a lot of outsourcing to consulting companies, to legal firms, to manage to keep on the pace of the regulatory change.
Yeah, we are actually quite fit with time. Let's allow one more question from the audience, and then probably we'll have to close for the coffee break. Yes, please.
Thank you for this question. We are aware that FCA in UK has a project on automated regulation. We are thinking a bit along those lines too. Probably the best place to start would be reporting, because that's already automated quite a bit. So it would be great if we could just whatever, like put it in XML form already in the rules, and you just plug it in your standardized or different softwares, but in a standardized form. So so we also don't want to produce a vendor lock, but yeah, that's yeah, that's gonna take a bit longer. But what you mentioned now, and I can tie it to the initial discussion. Yeah, Gen AI and explaining the rules or making finding quickly in the rules what you're looking for. That's something that we are experimenting with internally, and also thinking to put out as a service or like a regulatory chatbot that you could ask, where do I find whatever, what is the limit for a non-SCA transaction in Czech Republic or stuff like that. But the good thing about regulation is that it's open and public. So the challenge that we have as regulators with AI is we have a lot of data. A lot of it is not very usable, unfortunately, and all of it, or almost all of it, is under official secrecy and highly sensitive. So we can't really farm it out to LLMs to go through it. So we'll probably have to do basically use proprietary AI solutions. Lucky for us, if the data is well structured, which is usually is, you don't need LLM. LLM is there to troll the whole internet. For us, we need rather less sophisticated, algorithms. But back to your question, yes, that's something that we're looking at. Again, the initiative should come because pretty much all the important rules are EU rules. So this is a question that should be pointed at the European Commission. Maybe instead of useless blockchain projects, they should be thinking along these lines, is my personal opinion.
Maybe they should do CBD,
Maybe, or you mentioned actually that you are using AI to predict what regulators might do. So maybe the same AI the regulators should do to predict what they should do, or something like that. So anyway, guys, we are out of time. Thank you very much for the open discussions. Thanks to the audience for the questions.